Hey everyone, hope you're having a good day. My name's Andy, channel is Finding Value. Today we're going to do our daily technical analysis update of commodities, work our way through the dollar yields, precious metals, and commodities ETFs that I follow. I'll interject my financial opinions as we go through it. And if you need help with anything, check out finding-value.com. We dive deeper into all these different sectors looking for potential investment opportunities. We discuss it on a Discord channel. I'm on there quite a bit. And we still have a coupon code that's active May Day if you're interested in trying it out. So let's dive in here. Let's take a look, see what's going on today. We've got a dollar DXY that looks a little bit firmer. So a lot of the times you see potential double bottoms there. This could be a double bottom. And what you'll generally see on the right-hand side, you might start to see some wicks that show up on the bottom, which we have. So we could start to see this work its way sideways, or eventually try to turn up in the short term, and that's what we're looking for next. Can we hold here, or is there further downside? That's the question we should be asking. On the longer term, it still looks a little bit weak, and we very well have that momentum that's still running behind the dollar. This is all being generated from lower yields and a potential fear of a slowdown recession. So that's where all this is being stemmed from. The downward move, lowering of interest rates, that is what's the root cause or driver of it, in my opinion. So looking at rates, the 2-year yield is also lower today, down about 2%. This is really what is going to be impacted the most by a Fed funds rate decline, or them lowering rates. We also have support here, so we'll see if that support holds. You can see that we went a little bit below the support level of the bottom of this candlestick. We'll have to see if it holds. The momentum is still to the downside. It's coming up a little bit on the daily. Towards the back end of the day, it was starting to come back up. That is what, that's the bottom wick, is that wick right there. That is what's creating the wick on the bottom of that candlestick. So we came up back throughout the day. We have a little bit of upside momentum, but we've got longer term momentum coming down on that. We'll have to see if we can break back above, or if we are going to continue lower with the 2-year yield. The short end of the curve, which is the 2-year, if this continues to fall down, that is your own inversion. That is what's driving this whole mess and people getting worried. And there are things to worry about in certain sectors. We'll get into that in a little bit. So we've broken through the support trend line there. We've come down, and we're just going to work our way down, I think, for a little while. The 10-year yield also a little bit lower today, and it's right where we've got support. We're getting these little wicks at the bottom. I don't know if we're going to hold here or if we're going to drop to the downside. That's what we're looking for. So we could bounce and start to come back up. That's why we see a decline in the opening and closing prices of these wicks, of these candlesticks. And then the wick at the bottom here, that is signaling that we could get a potential turn where you come on down. It's basically a broken downtrend. So here it is in the short term. You can see the candlesticks here. This is that falling wedge. And then we get all this, I don't know what's going on with this gyration of rates here at the bottom. It's almost like this is trying to be manipulated to some degree, like it broke out, and then all of a sudden somebody came in and drove it all the way back down again to some lower level to kind of hold this down. There could be manipulation going on. I know that they're probably in there doing something with interest rates. And who in their right mind is buying this stuff to have a move like this, especially right after a declining wedge breakout, is beyond me, aka Federal Reserve. But this also has an impact on how the pricing of assets are. So when this goes down and they can generate fear, people will sell certain things because they're fearful, and maybe they have other priorities, like keeping oil price low during a presidential election or whatever it is. But we've got some weakness in bonds coming on down, and then we saw them get purchased back up towards the end of the day. There's that move from the low. So the momentum towards the end of the day is coming back up, and that's what I'm seeing in that wick at the bottom here. So we came down. The buyers are starting to equal the sellers in a falling wedge. We probably hit bottom here, and we'll see if we can try to work our way on up. Statistically, though, what I found is the shorter the time frame, the less reliable the pattern is. So doing this on a daily basis, on a very short-term time frame, sometimes these can just go and move on lower much more easily than, say, a really long-term pattern. Like this 10-year broken downtrend, that's a really big deal. Like we will go up with time. But in the short term, everyone's getting very fearful of a potential recession slowdown in the market. 30-year yields were up a little bit today, up 0.15%. Again, we've got that nice little maybe potentially reversal pattern of the candlestick today, which is it's the same candlestick as this one. It was a reversal that shot up, but it wasn't long lasting. And we are starting to base out down here and work our way sideways. TYX-TNX ratio is higher. It's actually a very bullish candlestick for a continued move on up. That is created by the 30-year holding its ground and the 10-year dropping some. That's what's creating this big bullish engulfing. So I think that rates will probably decline further, and we're going to see this go up. It's incredibly bullish for gold, silver, and the precious metals. This setup, at least historically, has been incredibly bullish for gold, specifically gold, and silver will follow at the end of it. TLT, which is bond pricing on the 20 years, flat. As we were up yield-wise on the 30-year, and we were down slightly on the 10-year, so we were flat on the 20-year, is what we're seeing. But we've broken this to the upside, so I do think that this is going to work its way on up for a period of time. It's going to be short-lived. It's not going to be forever. We're not going back to 1982 where we had high rates and we're just going to decline rates to zero over a 40-year period. I think that this is going to come up. We're going to go and then we're going to peak and then roll back over. That's what I think is going to probably occur. We've got the 2 and 10, which dropped 1.9%. We are now below the 1-to-1 level. This is where things get hairy. And I'm sure you guys have noticed that things are getting hairy out there, and this is where a potential slowdown is going to materialize. So it's not potential slowdown, it is a slowdown, is what this is crossing. Gold is down $18, and I know I said that the market conditions are right for this to go up. We had a slightly stronger dollar today, and then the 2-year dropped a lot more than the 10-year. That is generally good, at least the 2 and 10 on inverting. It's generally good for gold and silver to go up in. But we did have a slightly stronger dollar today. I think that this is still going to go up because of the market forces that drive gold in certain directions. So I still think this looks fantastic. Silver was down 3%. And I know this seems weird because I'm still stating that we are going to go higher in silver. Why do I think that? Because we have broken out, and yes, we could come back even a little bit more in the short term, but everything's lined up for a move higher. We've broken down trend lines. We've broken trend lines here to the upside. We've got small selling pressure candlesticks. Everything looks good. It's all G-O-O-D. It's all good. Platinum down a little bit today. It's just a little bloody nose is what I'll call it. I still think we've got some good upside pressure. This one does work a little bit later than perhaps silver. Silver and gold, they feed off of worries. Platinum feeds off of inflation, which comes right behind this. So be patient, it will come. And then palladium is the opposite metal. You guys have heard me say that before. And in a slowdown, this will get hit. And we got hit today 3.35%. It's still above support, though. It's still holding quite well. GDX, GDXJ, and SILJ are all down today. Pretty big selling pressure moves. I would be bullish on these. I am continuing to be bullish on these. And if we come back more, I would continue to add into this. Why? Because we've got the breakout of the pattern to the upside, and this is just your return move before the big move comes. The driver, again, is your yield curve on inverted. That is where gold shines. Silver shines a little bit behind it. So silver is the earliest in its stage of the breakout. GDXJ is right underneath because gold's the leader, and GDX, which has the major senior gold miners, has already broken out. So all of that sequence is still good, and I would go after the thing that is lagging. I would personally look at the silver stuff. That's me. XAU to gold ratio, it did have a big move down today, about 2%, but we are still above the critical support levels. And we're coming from a ridiculously cheap price. I would be looking, guys. And you guys know that if you're part of the website. Crude oil down 1.34% is what I'm seeing there. Coming on down, yields, we were up in the morning and so were yields. And then yields turned and went lower. And that's what drove oil to the downside. I think there's a lot of financial crap going on. Lots of things going on with interest rates and how volatile they were today. Looking at the fundamentals of oil, it looks pretty good. Technically, we have broken to the downside here. Now, is there further downside that we can get to the 50s or 60s? We very well could. It's totally possible. I don't think it will stay down here forever. I think it will be temporary for how people are pricing this for a recession slowdown. So this is your false breakout. Your false breakdown for a period of time. This is the time that you need to look. We are still early, and we don't know for certain how the demand will be impacted, or the supply for that matter, because now at $68, you're going to start to impact supply. And rig count will drop at this price, my guess. TTF gas up a little bit, 0.57%. There we are, still just tracking sideways. We still are at support, which is this guy here, which I'll throw a support line in there and get you one in there. There's the support line there. We're kind of still stair-stepping from these lows that continue to move on up. So that still looks good. We're still in an uptrend. We've got natural gas in America up 1.38%, coming from a very low level. Still looks good. We broken through some support here, or at least trying to. We've got our boy XOP, yeah, you know me. It's coming on down. Is this going to be a double bottom? Don't know. We could see further downside. If we take a bigger picture view, we have broken this trend line to the downside. It doesn't look pretty. But I will remain open-minded to see what occurs here. We could do something like this. So, sorry guys. So let me do this. We can grab this. I'll do that. And then what I'll do is I'll flip this. And what we could be doing is that right there. We could get a pullback before the big move higher. And that's generally what it looks like when we do these moves higher. As you go up, you hit resistance at these areas, and you create a pattern that is symmetrical because of the resistance levels that you hit as you go through this. There's a psychological aspect to the herd as well, and then you've got your cycle. So you hit up against this resistance, which is all right there. We could get a pullback that looks very similar to this. It's going to scare a lot of people out, and it's going to be the wrong move. What the market does is it tricks people into thinking the wrong thing. It gets you emotional. It provides the wrong feedback for most individuals to make money. But what I think is going to occur is we'll get this pullback here. Probably it's going to look very similar to the way that this has fallen. The way that we go up is going to be very similar to where we go up, and we're going to go way up here. We're probably going to make new all-time highs at some point in the later 2020s. So that's the viewpoint I have, and this is me just showing you what is a possibility and probably a likelihood. OIH, another one that has been getting some selling pressure here, and we could see further downside. Does that make me bearish? on energy service. No, it doesn't. In the short term, yes, it is bearish in the short term, but these companies are turning around from a fundamental perspective. Go listen to their earnings, quarterly calls. A lot of stuff looks really good, but we could bottom down here at some point, which is still a possibility with the fear of a recession and all that stuff, and oil being impacted. Newcastle coal futures moving sideways today, up 0.36%, and I think will continue to move sideways or higher depending on where TTF gas goes. We've got Sprott Uranium Trust. It is selling off a little bit more. We're back to that support zone of the trend line. We'll see if it holds. I know a lot of people are frustrated with uranium, but guys, the macro is driving this, not the fundamentals of the sector. Macro trumps the fundamentals for periods of time. You just have to understand that. It is still a bullish setup in uranium, period. There's no arguing the setup in terms of fundamentals. It's just the technicals in the short term and the macro is driving this, and we still could sell off a little bit to the downside. Uranium futures pricings up today. And I will say this too, just because you have the macro and the fundamentals of the sector battling each other, we don't know which direction will win with 100% certainty. So when I bring this up, I don't know that we will 100% get down here. You need to be working with probabilities. You need to understand that there's two forces hitting each other together, and those two forces could drive this in either direction. Right now, the macro force is winning, but that doesn't mean it will win every single day, and it won't mean that it can't find a bottom here. It all depends on which force is stronger and what force persuades the majority of buyers in the uranium sector to take action. And we don't know that with 100% certainty. We're getting some selling pressure in URA. That's also coming back, and this could be a double bottom. I say could be because look at the chart. We bottomed here, we came back up, and a lot of times you get a selling pressure back move to that other level. Is this a double bottom? I don't know for sure. We'll have to see follow through in the next trading sessions next week. We've got Uranium also doing what could potentially be a double bottom. A lot of people are going to say it's way too early to call a double bottom. Well, that's how you make money, is you're early. But there's also the risk that this rolls back over. And that's where things get hairy at the bottom. Buying bottoms are difficult because you have to buy it when there's max fear in the market. It's difficult to do. URNJ also doing something very similar. They got these wicks on the bottom, and we'll see if there's any bounce to this. A more conservative approach is obviously to wait for momentum to shift, and that would be a more conservative approach. A very aggressive approach is to say, screw it, give me the support levels that we've got. We've got support here in the level or area that we're in. So you could, if you're aggressive, do cost averaging in this box down here and try to get the best possible price for the potential move higher. But there could still be downside left, and that's where you'll never get your complete bottom and why buying bottoms are incredibly difficult. Copper down a little bit. We're still above support. It's still holding, and it does look like we could go down a little bit further. The support level is down in the 395 range. COPX, which is the copper miners, obviously selling off. And copper, I'm sure, is probably worried about a slowdown in the market and with all the selling pressure. Iron ore down 1%. Momentum is still to the downside in the short term. I do not see a turn yet. Aluminum. Aluminum is down 1.7%. Still looks a little weak. Momentum to the downside. Nickel still to the downside. So all the base metals still have downside. Why? Why do they have downside? I thought that the fundamentals were good. The fundamentals of the sector are good, yes, but a recession impacts the demand side. You're looking at the supply side. Other people are looking at the demand side. And sometimes these market selling pressure moves affect all of the sectors. MU also selling off, but this still looks really good from a technical setup. This is a breakout to the upside, but we are getting a little bit of selling pressure, and I'm sure that the overall markets are having an impact, and we could come back to the 70 level here. It's possible. Emerging markets being impacted by the overall sell-off. There we are heading lower. We've got KRE also being impacted by the overall sell-off, but still looks okay. It doesn't look horrible. We're not just dropping like a rock, free falling out of the sky. TAN also impacted, down 2.5%. We've got lithium impacted, down 4.7. Now that looks a little bit weak. Like I said, it was trying to find a bottom, but we haven't found one yet. And now we're starting to break through some support here with lithium. This could continue lower. Momentum's to the downside. REMX also seeing some more selling pressure. Doesn't look good at the moment. We've got to see buyers come in here for me to change my mind. Baltic Dry Index up, surprisingly, up 0.89%. Still looks good to go up. We've got XHB holding steady. Now, if we were in some ridiculous crash, like these guys are saying on Twitter, home builders should be falling. Those are all driven by real estate market crashes. This is still almost at all-time highs. It is way up there. So we'll see if this continues to pull back with the overall markets, and the overall markets could impact this and the housing market not be the driver of it. It could just be liquidity that people need because NVIDIA is blowing out the bottom side. So keep that in mind too. So in the short term, we'll see what it looks like, but this still looks very strong to me. Russell 2000's pulling back. We're back within the pattern. We'll see if that holds on support where we're at, if we can get back above it, or if it will continue lower. The S&P 500 selling off a little bit more aggressively today. We're starting to elongate those candlesticks. That means that there's a buyer-seller imbalance. The bigger these candles get, usually when you get up to the top. So when you come up here, what you'll start to see are these bearish engulfing candlesticks. They start showing themselves up all over the place. There's one here too. Then what you're going to see, so those are the bearish engulfing candlesticks. Then what you're going to see is you're going to start to see this slow down. It's going to fail to make a new high, and then you're going to start to see big selling pressure on the right-hand side if this is a top. In my opinion, this probably looks like a top, and we are probably topping out. Why do I say that? Because you've got all the drivers for a top behind this. It's got all the headwinds in the world: unemployment rate, uninversion of the yield curve that we just saw today, the 2 and 10, dropping of yields. That all aligns with it. Now, I don't know how big this will be. No one does. We don't know if it's going to drop like a rock or if we've got a long way to go, but it looks a little bit toppy to me, is what I'll say. And I've been looking for a top. I was premature thinking that this was the top there at a double top where we would come back like this, which I think was incredibly possible. But I think they got in the market and pushed this higher for this election, and now it's going to come toppling over unless they get in there and start buying stuff. That's probably why they're lowering rates too. One of the reasons. NASDAQ also seeing some selling pressure here, down 2.5%. That still looks good to go lower. We've got our bearish engulfing here. We've got another one here. We have another one here. We've got another one here. These start showing up all over the place. And they stack up. So they stack up. We've got a rising wedge where the sellers start to equal the buyers, and then the sellers overwhelm the buyers, and it turns over. So I do think that this could head lower in the short term. We've got SMCI continuing to head lower. That looks like total garbage. We do have support down here at about 350-ish and below. NVIDIA also selling off about 4%. Another bearish engulfing today. We've got one here. We've got one here. We've got one here and here. They start to show up all over the place. Then you get the big elongated red candlesticks start to show up. You do not see this type of action on the left-hand side. So if I were to go over here and zoom in on the left-hand side, you won't see all the selling pressure candlesticks. What you'll get are big green candlesticks, big greens and then small reds for the things as they go up. If you start to see patterns that are angled upward like this, so it'll do like these things, that is a bearish function. It means we're going to continue lower. If you see patterns that are angled downward, where a stock comes up and it goes this way, that is generally bullish. So that's what we're looking for next, is what patterns get generated over here, or do we just keep falling? Bitcoin also falling 4.8% or so. With the NASDAQ and S&P, we're also seeing Ethereum not doing so hot. Looks like it's trying to break more towards this bottom trend line here. Now, I can manipulate this down, but we could also put a trend line here, and we'll see if that holds there. But another big selling pressure day there for Ethereum. And that's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Mayday coupon code. But we've got kind of a sell everything event going on today. We didn't see anything really go up. Gold went down, even though the market conditions were not horrible for it. Oil got hit. Most everything got hit today. NASDAQ, S&P, a lot of the commodity sectors. In the beginning of these sell-offs, everything's impacted. There's a lot of margin out there that probably needs to unwind as things go lower. People are forced to do things and take action. And that's kind of where we're at in this cycle right now. It doesn't mean that oil is necessarily bearish for the big commodity bull market. It doesn't mean that uranium is either. But in the short term, yeah, we could go down because it's macro driven. It's not driven by the fundamentals of the sectors themselves. So that's what's going on, in my opinion. We'll continue to watch it together here, guys. And we do have a Sunday question and answer session at 5 p.m. coming up. And we'll see you guys there with your questions. Okay, bye.